if you're a veteran, it's a zero down. Not only is it zero down, there's no mortgage insurance. So a VA loan is going to be by far top notch, the best loan that you're going to be able to get as a veteran. So I am Brandy Whitmire. I am a direct lender broker, and I am nationwide. So nationwide direct lender, broker, banker, have every product that you can think of. So if you are looking for a loan, let me know. If I don't have it, I'll send you to the place that does. I feel a little off because last week I went over and had a guest, which I'm going to try to do that next week too, try to switch it up a little bit and make sure that the content that we're giving you is what you need and is necessary and relevant to what you need out there. So this week I'm going to talk about ways to get a down payment and if you even need a down payment. I want to talk about the products that we have that actually don't require any money down at all. The minimum down payment and how to get it. So first, I want to talk about, and also, as always, if you have any questions during the cast, just insert it in the comments. You can always DM me, email me, bwhitmire@financemyhome.com, or call us 214-660-5000. So first, I get a lot of people ask me, what can I do to not have a down payment? Or are there programs that don't require down payment, or are there first-time home buyer programs? And the answer is yes, maybe so. There might be something good for you. So for no down payment, first of all, if you're a veteran, it's a zero down. Not only is it zero down, there's no mortgage insurance. So a VA loan is going to be by far top notch, the best loan that you're going to be able to get as a veteran. If you have more than 10% service-related disability, then you do not pay the upfront guarantee fee that is financed into the loan. So if you have more than 10% disability, I mean, no guarantee fee, no MI, no money down. But if you are not a veteran and you are buying in a rural county, we have a program called USDA. It's a rural loan. What you'll want to do is look for that property on the website, usda.gov. and see if the property that you're interested in, it falls in a USDA territory. If that's the case, then you might be qualified for zero down. We have to run the application through a specific system. There's some parameters that need to be followed, but that's definitely can be an option for another zero down program. Another way to get zero down would be to do a bond. So in every city, there's going to be different bonds that you can look into, and basically some of them will have income requirements, some of them will have credit score requirements, household income requirements. So based off of the county that you're moving into, or the county that we are moving into or living, there might be, like in Dallas, for example, we have about 5 or 6 that we work with. Some have higher income requirements. For example, we have one that's like up to 100,000 now, household income, which is great. And you can get anywhere from 3% to 5% as a bond or a grant given to you to cover that down payment and closing costs. So if you are picking out a loan that has, let's say it's a 3% down loan, or conventional, or 3.5% down for FHA, and you have 3 or 5% bond money, then that would go towards the down payment of the home and closing costs. So if you got 5% in bond money, and you're doing an FHA loan 3.5% down, that would cover the 3.5%, and then you still have 1.5% to cover closing costs and whatnot. So if you're interested in looking into that kind of option, let us know, and we will run your application and see if you qualify for any kind of down payment assistance. So bond, grant, down payment assistance programs, and then keep in mind that those programs, they have their own rates. It's not a market rate. They have their own interest rates, because that's basically how they're getting helping you out with the funds, which is great. But we can always refinance you out of that in a year or so, or whenever the time is right. So let's say you don't qualify for any of that. You're not a veteran. You're not buying USDA territory. You make too much money for a bond, or you just don't want to do the bond product because the interest rate is high, or whatever the case may be. So On conventional, you can go as low as 3% down. It's not my favorite loan. I like more of the 5% down conventional loan, just because it is a little bit higher. But we have Home Ready where there's a reduced mortgage insurance and things like that. But it just depends. Conventional at 3% down is not my favorite, but it really is a case by case scenario. The other option would be FHA. So FHA is 3.5% down. You're always going to have mortgage insurance with FHA, okay? So the reason why I like FHA is because on the rate, there is an opportunity for you to bump up that interest rate and pay for closing costs, which I really like. I don't, you know, for a while now, I haven't really believed in paying for closing costs. I personally always use my rate to pay for closing costs. I would rather that money go towards my principal or sit in my bank. Whenever you're talking about low interest rates below 5%, right? Now, in a market like right now where rates are trending up, you know, the Fed is going to meet one more time this year. So they're talking about another rate hike. I mean, it's probably like I think I read today was a 92% chance that the rates are going to hike again in November. It won't be that significant to the public. You're not going to see that much of a drastic. It's not going to go to like 8% or anything, hopefully. You never know. But whenever you're doing the Fed does a rate hike, it's like usually like a quarter, and that's on pricing, not on rate. So that's on a back end. So the reason why I like FHA is that it's 3.5% down. You can do a bond with that, so 3 to 5% onto the bond, if you qualify. But you can use that interest rate. Let's say your base rate is 4.5%. You can bump it up to 5% and get a few $1,000s to cover your closing costs, so that what you're bringing to the table is actual equity and put money back into your house. So I'm really a big fan of the FHA for a first-time home buyer. There are loan amount restrictions. For example, you know, in some counties it's not over $334,000. Some counties it's not over $290,000. So FHA does have a loan limit restriction. So we'd have to look at that as well. So where can that 3.5% or 5% come from? When you're doing an FHA, so there are, let's say, obviously regular checking and savings. You save your money, you put it back in your piggy bank, you put it in your savings account, and you can use that for your down payment. Now, I just said piggy bank, and that's kind of ironic because next thing I want to say is that you cannot use cash on hand. So no, you cannot dump out your piggy bank and bring it to the closing. It's not a thing. So you want to make sure that money that's in your account is seasoned for at least 60 days. That's the only way we're going to be able to use that for your down payment. Now, let's say you don't have enough in your checking and savings to cover that 3.5% down. Let's say it's a $100,000 loan and it's 3.5% down. You need $3,500, right? We're talking about minimum requirements here. You can borrow from your 401k. And not have a penalty. You want to get with your 401k provider or your retirement fund provider, but you can use retirement funds for your down payment. Another way would be if you have a trust. You know, obviously, if you have really giving and generous parents or family members that can give you a gift, you can get the funds by gift funds, or someone of significance, really. Another way, your employer. If your employer can actually give you a gift or money towards the down payment of a home. So if you have that kind of situation where you can get a bonus or a gift from your employer, that's also an option. So 401k, trust, retirement accounts, your church, your employer, any kind of person of interest in your life. If someone's significant in your life, we can document that and also get a gift from them. So I see that a lot whenever we have like best friends or domestic partners buy a home together, and the other person's going to live in the home but not necessarily be on a loan. They can actually gift part of that down payment, all of it, to the primary borrower. So another interesting thing, and what I want to talk about is gift funds from a wedding. So a lot of, whenever we go and, for wedding gifts, a lot of people write checks to the couple, right? So in that case, I do want to mention that there's no 60 days of seasoning there. So as long as you deposit that money within the 60 days of the actual marriage certificate, you can use those funds as down payment as well. So again, those are all the ways that you can get the down payment. If you have any questions on how to, on what your options are, if you can buy in a USDA territory, if you are if you are eligible for a bond, or how to put yourself on a plan to save for that 3.5 or 5% down, then give us a call, email me, call me, and we are happy to help.